We are starting the second week of June. Is this the June swoon? As interest rates start the month rising, in large part due to jobs reports that showed a very strong jobs market, with more jobs coming than expected in both the ADP, the private sector jobs report, and the BLS, the Bureau of Labor and Statistics jobs report, which dropped on Friday. And this week, well, I tell you, we have the probability of rates going up this week is pretty strong because we have the CPI report coming out. And the CPI is a consumer price index. That is, it's not the Fed's favorite measure of inflation, but it's still pretty strong. And this week, the question is, will the core inflation strips out food and energy because those are more volatile prices? It strips it out. The core, the expectation, or actually the last reading was 2.9%. And realistically, the expectation is that inflation is going up and we will see a rise in inflation, which will cause interest rates to continue to go up. Not the news that we want to hear as we get into what is typically a strong, big moving season with a lot of transactions. All right, so let's break down what's going on this week. Economic, there are a lot of reports. CPI, though, on Wednesday does take center stage. So let's go day by day. So let's take a look at the rest of the week, what's going on economic-wise. That's going to impact rates. On Monday, we start out with the Consumer Credit Change Report. Tuesday, we have the ADP Weekly Preliminary Estimate of Jobs. So they do this every week and kind of really gives us an idea of what the ADP Jobs Report is going to be that first week of the following month. We have a trade balance report coming out. We have existing homes change. And that, while that doesn't tell you where the economy is going, it tells you based on where the economy is at, what do we see for existing home sales? This will be for the month of May. On Wednesday, again, we have the CPI report. We also have the Bank of Canada. Let's not forget that Canada is officially in a recession as they have had. They're in their second quarter of negative GDP. Will the Bank of Canada lower their Fed funds rate? Typically, when a country goes into recession, they will lower rates. So what will we see from the Bank of Canada? Thursday, we have the PPI, the Producer Price Index, which is the wholesale inflation report. Expectations, really, the people who feel the heat the most or the pain of inflation the most are the producers, the people who provide the services, the goods and services. So will that be higher? Expectations, probably. We have a European Central Bank rate decision. All right, you know what? It's not just Canada that's going through some tough times. Even across Europe, you're seeing that. What will we see from the European Central Bank with regards to their Fed funds rate equivalent? We also have continuing and initial jobless claims coming out on Thursday. This is a weekly report. And then on Friday, we have the University of Michigan's Consumer Sentiment Index, which doesn't move the market too much, but it does certainly plays small role. So where are we at with rates as we begin the week? All right, so we got, with regards to rates, conventional, we are 6.6 to 6.7, 6.8%. So getting closer to that 7%. So there are some people talking, if things continue the way they are, we could get up to 8% on interest rates conventional. If we get up to 8% on rates conventional, I tell you what, that 6.5% rate that you have now is going to seem pretty good. And remember, all right, those rates that we had in 2020, 2021, and part of 2022 in the high twos, low threes, those were historically abnormal. There should be no expectation on anyone's part that interest rates will get back down there. Anytime that you can get yourself into the fives, you are beating the law of averages. Don't take that for granted, anybody. So a 6.5%, while higher than it has been typically over the last several years, it's still better than where we could be going. And you know what? Ultimately, rates will come down and you'll probably refinance that loan anyway. Let's take a look at VA rates. We are smack dab right under 6.2%. The expectation this week is we will stay somewhere around 6.2%. There's no reason to believe with any of the economic reports that are coming out that we get below 6.1%. There's more likelihood that we get closer to 6.25, but we'll see. And then again, of course, we also have what's going on in the Middle East. There could be some breakthroughs, and quite frankly, I don't see it. I think that, we got President Trump's birthday coming up. You know what? If I was Tehran, I would be doing what I'm doing now. But you know what? I will also say this: the patience of the United States, in particular, the patience of our president, is wearing thin, and I think realistically we could see some kinetic action again in Iran, just trying to push the Iranian leadership to a change of heart, maybe a change of who's in charge there. But we shall see. I'm in Hawaii, so does this affect me? It absolutely does. But my impact on it is minimal. I just see what I see, and I've been there before. Don't like that area at all, and I really, really pray for the safety of all of our service members out there. But I do hope for an ending to these hostilities with positive results, really, for the region, so we can get back to doing the things that we need to do to fix America. And because home is where it's at, right? All right, that's what I got for you this week. You guys have a great week. Stay positive. Let's go.